presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compac Market Wrap YouTube update for September the 30th, 2025. I'm Mo Ansari, President of Compac Asset Management, and thank you for joining me today. First of all, a quick reminder, don't forget to click on the subscribe button so whenever I do an update, you'll be notified and you can watch it at your convenience. Also, you can go to compac.com and click on Insights and the podcast, which is a much more detailed view of what I'm going to just talk about. It is there also. Javed and I do that. It's about 30 to 45 minutes and gets into a lot more detail. Looking at the numbers last week, market slightly lower, down 0.33%, down 0.30 for the S&P, 66.44, Dow down 0.15%, Russell down 0.58%. The NASDAQ down 0.64. So all the markets down, but if you look at the quarter overall, nearly 14% higher year to date and about 7.5% higher for the quarter. So it's been a tremendous quarter, even though September is usually the worst month of the year, but the market has held up and we continue to move higher. I think the rate cuts are positive. The economy continues to do well. Inflation is sort of in check. And all the fears about all the inflation coming due to tariffs, all of the slowdown coming due to tariffs has not materialized. Just like everybody was looking for a recession in 2022 as interest rates went up, didn't happen. Same thing is happening now. The economy continues to surprise. And as long as the consumer continues to consume and the profitability is still there for the companies, the market continues to march higher. Energy was the best sector last week. Communication services was worst, down 2.7% overall, and that's what we saw. So we continue to move, rotate back and forth. Energy up 4.7%, and communication services, that's Google and Meta, down 2.7%. So it was a little bit of a pullback. Oil was up to $65 a barrel, still in that $60 to $70 range, going back and forth. Looking at interest rates, they were slightly higher, up from 4.14 on the 10-year to 4.20, even though we have had interest rate cuts. And there's still expectation that the Fed is going to cut rates again, but just hovering between 4 and 4.5. Market sort of can handle that. If it gets much below 4, then the market will be worrying about a recession. If it gets much above 5, then people are talking about too much inflation. Right now, we're sort of in the sweet spot as far as interest rates go. Gold prices continue to move higher as the deficits continue to mount and people continue to look for something. And the central banks continue to buy a lot of gold. They're moving towards gold, especially countries that used to buy U.S. treasuries after what happened to Russia, which had $600 billion in reserves, $300 billion in bonds, U.S. and European bonds, which got frozen. $300 billion in gold when they invaded Ukraine. They said, okay, the gold was still there. So a lot of central banks are starting to look at it as an alternative to treasuries of European countries and U.S. and going towards gold. The central bank demand continues to go up, and that continues to hold the gold market higher. Looking at new home sales, they rose nicely, up 800,000, up from 664,000 homes sold. So new homes continue to move higher. Initial claims, everybody is worried about unemployment going up. Well, the initial claims fell to 218. This week, we are going to get data. Unemployment data is going to be the biggest, expected to be released on Friday, but it will depend on what happens with the government shutdown, which could start this evening. And if that happens, we might have a delay in the release of the unemployment data. It might not come out on Friday. So we'll have to wait and see how this whole thing goes. Usually government shutdowns have not affected the markets, but if it is a prolonged shutdown, then we could see some impacts on the market and the economy due to that. We'll have to wait and see. Usually in the last minute or within a day or so, the politicians come to their senses, and they usually come to some kind of agreement on the government shutdown. But we'll have to wait and see, because again, the political divide is so large that we might see some political party just sitting there and letting people, there's no reason for a government shutdown. They can figure out budgets, they can do all of that, they can argue all they want, but people lose jobs, people lose essential services that are important to run the country. So we'll have to wait and see. But in the short, if there's a short shutdown, it does not affect the markets or the economy. But if it's a prolonged shutdown, goes on for weeks and weeks, that could have a major impact on the economy and the unemployment numbers. Looking at the technicals, market continues to move higher. 20-day moving average seems to be holding for the last couple of months. We come down to this red line, bounced off of it. Last week we got down to it, bounced off of it. That is about 6,600. We're at about 66.5 today in the market. So if we can get below that, then we're looking at 6,500, which is the 50-day moving average, and then obviously 6,000, which is the 200-day moving average. On the weekly charts, again, 6,304 is the 20-week moving average, then 6,000, the 50-week moving average. Market just continues to sort of go back and forth, not really a lot of momentum to the upside or the downside. NASDAQ, same thing. We're looking at third wave high right here. Should get a fourth wave pullback somewhere. Still around 22,250 is the 20-day moving average. 21,670 is the 50-day moving average. So those are the two support areas. Each one of these lines, vertical green and white, red lines you see, is 1 day of trading. Here, each one of these vertical lines is 1 week of trading, and we're looking at about 21,000 as the 20-week moving average, and then 19,560 as the 50-week moving average. We're about 22.5 this morning in the markets. Looking at the 10-year note, we're looking at the gold market. 10-year sort of stuck between 4 and 4.5. Looking at the gold chart, this is GLD, which is the ETF for gold. It gapped up right here on Friday, gapped up today, and there's this space between this line and this line. There's a space between here. That is called a gap up. This could be an island top. If we see gold turn down from here and gap lower, that would leave a 2-day island top, which usually marks a turnaround in the market. Market is extended in gold. We're about 3,700 in gold. So I think we are due for some kind of pullback here in the gold market. We'll have to wait and see. High yield bonds just continue to move higher. As long as they're above the 50-day, we're okay. And that just shows you the strength in the market overall. Those are my thoughts. Those are my observations for this week. Again, not a lot going on in the market, sort of everybody coming and waiting for the month to end, the quarter to end, and then we'll start to see what happens. And the government shutdown sort of could impact the market. So big data is going to be the unemployment data. We will have to wait and see if that comes out on Friday or not. Don't forget to subscribe to this channel. If you need help with your portfolio, give us a call, 800-388-9700, or go to invest@compact.com and send me an email. We will be more than happy to get in touch with you. Those are my thoughts. Those are my observations. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.